What's up, YouTube? Welcome to another exciting personal finance video where I'm talking gold, silver, investing, all that good stuff. If you guys are into that, please like the video, subscribe to my channel, check out my website, My Road to Wealth and Freedom, in the link description below. Quick disclaimer, I'm not a financial advisor, so please do your own research and consult a financial advisor before making any investment decision. The channel is for entertainment purposes only. Okay, guys, May 20th, 2022, and it's been a crazy past week since my last video. So everything in the economy seems to be rolling over. We've had tons of reports from Monday. Every day this week, essentially, it's been bad news. Not that I want to just dwell on that, but I think investors need a realistic assessment, appraisal of sort of what's happening, what's going on in the world today. So let's just go through the stock market right now. Of course, it's selling off today. It's had a wild ride this week. Right now, it's down. The Dow Jones is 30,651, down 600 points, or just under 2%. S&P 500 is now firmly in bear market territory at 3812, down 2.25%. The Nasdaq's just over 11,000, down 3%. And so on. Gold today is 1839. Silver is 2166. Oil is 112.36 a barrel, and the U.S. 10-year Treasury is 2.78. So Treasury yields are going down, probably because everyone's freaked out about all the craziness in the market. Last but not least, Bitcoin is at the US dollar 28,721, down 4.2%. Ethereum is 1924. So with that out of the way, yeah, let's just, I guess I'll take crypto first. It's been a terrible month for crypto. Bitcoin is at lows not seen since I think last year, and it's probably going to go much lower. Just my thoughts. We saw the chaos over the weekend with Luna and UST or whatever. Basically went bust, broke the buck. I think Luna went down completely. There's real pain out there. There's real people who bought into the dream, I guess, or were scammed. Essentially, they threw a bunch of their money. For most of the people, and they're young people, and it's just it's everything they had. They sincerely, genuinely believed this, believed the narrative. Hope you enjoy being poor, Dogecoin to the moon, Bitcoin to the moon, all this crap. Anyway, they're getting killed right now. They're getting slaughtered. Even institutional investors are facing margin calls. So my guess is, crypto is going to go down significantly, Bitcoin in particular. And it's all just, it's not an alternative. People were saying how, Bitcoin is, digital gold. No, it's definitely not. It's tanking. Bitcoin, all crypto are essentially risk assets, just like stocks. They trade off the NASDAQ. I've been saying that for a while. If just watch every time the NASDAQ's down, so is Bitcoin. It never goes against it, and and that's fine. It doesn't have to be digital gold, but I think they try to throw that out there to say, oh no, it's a safe haven. Don't worry, you'll be safe. It's not true. At the end of the day, gold, real gold, silver, physical in your possession, in your hand. It's not subject to the vagaries of, if Elon Musk wants to dump a bunch of Bitcoin, or, Michael Saylor wants to dump a bunch. Anyway, at some point, I guess, it might be worth buying into some Bitcoin. I just wouldn't put all my money into it, and I certainly wouldn't do it now. There's probably going to be more blood in the street with this sort of Fed engendered recession coming. So anyway, that's my thoughts on crypto. Man, so much has happened this past week. It's hard for me to keep track of all this stuff. I'm seeing all sorts of stuff. The news yesterday, I checked CNN, I don't know, say 9 p.m. last night. So that would have been May 19th. The big headline was, how to protect your investments from a recession and inflation. So now the terrible financial news, economic news, is now front page. Um, so we're starting to get to a place. I think there's going to be panic and more pain, and then we might sort of get to this sort of bottoming out, you know, buying at the bottom type opportunity. Now that's not financial advice, and we all got to do our own thing. But I honestly don't believe that the next 10 years of investing are going to be anything like what we saw in the last 10 years since the 0809 recession. Anybody who bought any stock or piece of real estate or just about anything under the sun has done fantastically well. I myself have benefited enormously from that. You could dollar cost average your way in. You could participate in dividend reinvestment plans, low cost brokers. Just buy, and it's all going to be fine. I don't think it's going to be like that going forward. And I've been playing it safe for, I don't know, almost 2 years now. Um, you know, Getting out of debt, paying off my home, staying debt free, building a large cash position, buying quality companies. Um, Gold and silver obviously play a role in all of this stuff. Um, the name of the game, at least in my opinion, my mind right now, is you need to protect yourself. You need to protect your wealth, and that's exactly what I've been doing. It hasn't been perfect. I've missed the best parts of the rally that we had in the last year, um, but it was all kind of phony baloney anyway. And it, when you're looking at a chart, yeah, everyone wants to buy at the bottom and sell at the top. The reality is it never works out that way. We just genuinely don't know the future. So the best thing you can do is constantly be hedging your bets and playing it safe. After all, this is our hard-earned money that we've worked for, um, slaved away at, toiled away at jobs and that. Like, you don't want to be caught, um, losing it all. Like, I'm afraid some of these young people with crypto and some of these high flying Nasdaq, like, I mean, the Nasdaq's been in bear market. It's down like almost 30%, I think. Certain names are down even more. If you bought into Peloton or Zoom and that, you're getting killed. That Kathy Wood ARK Invest fund, all of that stuff is just getting killed. It may be, if it goes down some more, it may be even a halfway's decent buying opportunity, but it's just really hard to see. Um, anyway, let me just move on now. The other piece I want to talk about was the housing market. And globally, housing is doing terrible. China, I see they've what did they do? They slashed rates on mortgages. They're trying to stimulate the property market. They've been having a hell of a time over there since last fall, with Evergrande kind of blew up and it's taken everything down with it. Now they've had COVID lockdowns and stuff. Globally, everything seems to be quite weak when it comes to the property market. But I just want to kind of mention a couple things. First, I'll start with the Canadian housing market. This just came out a few days ago. It's on the Financial Post website. Canada's average home price slides to $746,000. Sales plummet amid rising rates. Of course, sales fell across 80% of local markets. So in March, that's where it peaked out. The average home in Canada, $796,000. It's down 6.3%, and the April number is $746,000. So already it's rolling over. Now the parade of articles are coming in about buyer's remorse. They have a lot of regret. They bought at the top. Just don't see how any of this really ends well. Sooner or later, you have to pay the piper. Um, you know, and where did the biggest decline was in the Greater Toronto area, which was also like literally what was fueling a big portion of the insanity. I live in the GTA. It's crazy. Houses, multiple bids. Things selling for hundreds of thousands of dollars. Listed at 600 grand, sold for 950 and stuff like that. Like that is not unusual. That is, or at least it wasn't unusual a few months ago. Now, my guess is you're hearing crickets. And I checked on Rate Spy. What's the lowest mortgage rate you get? Now, I don't know who qualifies for these. There's always a big thing, but they're around 3.5 to 4% now for a 5-year fixed. Variable rate is 2% roughly. So these interest rates have moved up. It is having an impact. If who can qualify for those type of mortgages is another question altogether. I don't feel like mortgage approvals are happening as quickly as they were. I think lenders are being a lot more discerning. So that's the Canadian housing market, long due for a pullback. And my guess is it's just starting. All of this. I talked to somebody last week, and they were like, "Hey, yeah, the economy's still strong, and it's gonna." And this is a fellow who works in the banking industry. It's economy strong. We're opening up from COVID. It's like, what are you talking about? Opening up from COVID? We already opened up. Like, where's this super strong economy? We have inflation raging. I filled up at $2.09 a liter. I don't even know what that would be in gallons. Probably 10, $12 a gallon. I'm not sure. Anyway, I see it's in the US, it's over $5 a gallon. Like this, like our energy bills, electricity, natural gas has gone up. Food prices, food inflation, it's just everywhere. So like, I'm just not sold on this. Oh, the economy's opening back up. This is, people are kind of stuck on, replay, I guess. Like, oh no, we're opening back up. Oh no, it's open. No, you have a major war going on in Eastern Europe. You have a huge energy crisis in Europe. You got lockdowns in China. Just like, I don't like this. Sounds like a terrible review of the state of the world right now, but I can't make this stuff up. This is what's going on. So where is the rosy outlook is my response. Like I just don't see any of this being great. And so my guess is that what we've seen is just the beginning. We're just in the early stage. Like the Fed Red Bank of Canada, central banks have just started to raise rates. It's not like they're halfway through. It's not like this is the last rate hike and then we'll see how it all kind of unfolds. Like this is just beginning. And I know markets are forward looking, but you start messing with people's disposable income. We're service-based economies. Like we don't produce anything anymore. We don't make it. Like I just don't see where all this is going to have a happy ending. But anyways, that's the Canada piece. I'm going to move on to the US now. I got a lot to get through. Saw an article in the Atlantic. US housing market has peaked. Reuters, US existing home sales fall for the third straight month, but prices are holding for now. So in the US, I guess your prices are holding. It must be, I don't know if it's a national average that they use, but your prices haven't fallen, just sales volumes are way, way down. And I mean, this is just beginning. I won't be surprised, in a couple months from now, we're going to be reading same headlines as from like Canada. U.S. housing prices fall 5%, 3%, 10%, whatever. All of the excess, all of the big moves and swings that have happened post-COVID, post-pandemic, that all has to be worked off. That was unnatural. It was artificial. And anyways, that stuff has to be worked off. But what stays behind after all of this stuff is the debt. And that's why I keep hammering home about debt. No one gives a crap about it, but I think now people are starting to. People are starting to wake up to the fact that, hey, listen, if I got a line of credit and I only have to, or a HELOC, and I only have to, make interest only payments, hey, that's great. Well, now interest is 5%. All of a sudden, you're paying, $500 a month on that, when it was, $200 a month. That's all eating in. That's all working its way through at the same time that the average consumer is facing massive inflationary pressures. Anyway, let's move on. So, the real economy, let's talk about that. We had a bunch of retailers in the US report: Walmart, Target, Lowe's, Home Depot. What did they have to say? Nothing good. Supply chains are still screwed up. They don't have enough inventory. Inflation's wreaking havoc. Um, they've had to um, readjust their sales and forecast, price forecasts, and growth forecasts. They've all been revised down. They're not going to be able to meet them this year, and it's just going to get worse from here. Yeah, so we talked about gas prices, food prices soaring, stocks are rolling over, bonds are kind of perking up. They had a big sell off. The US 10 year was around 3.15%, let's call it, 3 weeks ago. Now it's 2.78, 79. It might go down a little bit more as the yield might fall, prices will go up because people are freaked out about stock market collapsing and you know that type of thing. But at the end of the day, I mean, again, now we're looking at balance sheets of the U.S. government. I haven't even checked the debt clock anytime recently. So who knows where that is? Actually, I am kind of interested in it. I want to see the U.S. debt clock here. Um, Let me just bring that up. It passed 30 trillion or something like that a couple months ago, maybe. Who knows where we are now? 30 trillion 461 billion and change. Keep on moving. Yeah, so I mean, we have all this stuff. Um, all the debt, the post-pandemic spending, governments are still engaging in deficit spending. Interest rates are going up, which is going to hit them hard too. Who knows? I doubt they really have the tax receipts to support all this stuff. I mean, at this point, if you're watching this video and you're into this type of stuff, then you know that it's just a giant Ponzi scheme. The amount of debt in the system is just outrageously high worldwide. Nothing has been done to kind of burn any of it off. And it's interesting. I'm reading this book about the end of World War One and the settlement, and they're talking all about the financial system. And the author kind of made a point about how war spending. They often compare the pandemic to like wartime measures, wartime spending. And it's interesting. So I'm reading this World War One book where France and Britain were at the top of the world economically. London was the economic center, and they went from the richest countries in the world to literally um, not necessarily the poorest, but France had a hard time. They were a huge debtor nation. The UK or England, they went from being the world's reserve currency. Um, London was the center of world commerce and banking and that. And at the end of the war, they were also a debtor nation, and they struggled to hang on to world reserve currency status. I mean, that was clearly going in the U.S. direction, but that's the type of spending. Um, this wartime, war level spending deficits, and they kept running deficits after the war too. And I mean, look at where we are now. Um, Anyways, the point is that kind of debt is not backed up. It's not like you've invested in, like the author's point was like, it's not like pre World War One, private investors would take on debt to invest in real assets like railroads, maybe shipping, steel plants, that type of stuff. There's like a real asset backing the debt. Well, that wartime spending is all just basically the money's been spent and there's no real asset left. And that's kind of like the post-pandemic, spending and stuff, or in the pandemic spending. It's all just, there's no real assets that have left. People just went and, in my opinion, kind of probably pissed the money all the way. They bought all these crap consumer goods and subscriptions and whatever, or they like really blown it on like real estate that was already at inflated prices, and then it just went into like a blow off top super bubble. Um, And what's left? Well, now the underlying value of those quote unquote assets, whether you took on margin debt and bought Bitcoin or stocks or whatever, well, the collateral, the underlying value of the asset is dropping significantly, and people are going to be underwater. And with a recession in the wings here, it's not looking good. There's how are people going to be able to keep making those payments? If they default, then all of a sudden, it filters through the financial system, and that is the problem. Everyone keeps saying, "Oh, hey, yeah, like the banks are well capitalized. They're ready to hit to take on a recession. They're never ready with this amount of debt anywhere, anytime, globally. There's already a recession. Europe is screwed. China, the Far East, everywhere. It's just this really does show, I don't know, in my opinion, the limits of what governments and central banks can do to kind of hold everything together. I feel like the world economy, we're on this like kind of life raft that's just it's in tatters, and they're on their last kind of few pieces of duct tape to keep it all together. Um, Now I'm not saying like gold and silver is the great savior. I mean, this stuff's getting hit too. It's looking like maybe silver could fall to $18 an ounce. Gold might even go down 16.80, or it could go even lower. If we get a massive credit squeeze, liquidity crunch type scenario, gold and silver are going to drop significantly. Um, but my guess is they'll probably rebound significantly. And at the very least, with this much stress on the financial system, on the world economy, with this much uncertainty, um, if you don't have some cash savings, if you don't have some precious metals like gold and silver, if you don't have if you're carrying lots of debt, I mean, you're just not, yeah, you're probably not gonna do very well at all. You're gonna struggle and suffer um, unnecessarily. It's worth being prepared. I've slowly been, you know, I'm not gonna lie, 2020 was a huge eye opener for me. I already had misgivings. In the fall of 2019, I had sold out of a lot of my stock positions and stuff, and I was just sort of, it just felt like long in the tooth. We had the repo crisis. Usually that kind of heralds, it's kind of like a bad omen. Um, and then of course, in 2020, nobody could have foresaw that, back in 2019, I guess. But yeah, I mean, it's like, where do you put your money that's safe right now? And there's kind of really like no safe haven, and that's basically, has been my argument the past couple years with people. It's just like, I don't really know what to say. Any of these things, everything is so inflated. The prices and of everything are pushed to nosebleed levels that you just can't really buy anything. And to sit in cash kind of sucks too, because you're suffering, the effects of inflation and that. But I guess for now, I'm just kind of holding steady. I mentioned in my last video, I picked up um, some junior gold stocks that were on sale, um, as well as the silver stock. I'm still holding those. I'm not really sure. Kind of, those could go down significantly. I'm not adding any new money to anything right now. I'm just still in cash, mostly in cash, building more cash with every sort of paycheck, that type of thing. Even gold and silver, I'm looking to pick up another ounce of gold. I don't know when. I'm just sort of sitting back and waiting. I'm in a pretty good spot, all told. And even silver. I mean, if silver takes a massive dive, I'll be picking up another tube of these Canadian maples. Um, but yeah, for now, just kind of wait and see. And I hope you're all doing well out there. I hope you're all, preparing as best you can. And these definitely aren't easy times. And there's a lot of contradictory like advice out there. it's like the whole inflation deflation, or now it's like, are we going to get a recession, are we not, and this and that, and I don't really see the need to, you know, you don't have to position yourself 100% all in for any eventuality, you know. The way I've been doing it the past couple of years, and you know, it's not a perfect way, and I have missed out a lot of like the excess gains and stuff like that, but I've been able to sleep at night. And you know, I just really truly believe that, you know, people need to be diversified. People need to be aware of the threats out there. It's not like you got to dwell on them. It's not like it has to preoccupy every moment of your day, worrying unnecessarily about, you know, things that are largely out of our control. But the small amount of our lives that are actually in our control, you know, do we spend more than we make? Are we well diversified among different asset classes that behave and perform differently in different circumstances? You know, should you own physical or go with ETFs? I myself, I'm comfortable holding coins and bars. I totally think that, you know, at least if you're going to jump, if you want to truly be diversified, everybody should have some real physical assets and precious metals and stuff. I'm not saying you have to put your life savings into it, but I do think a small portion. I know I was reading in one study, if you have 20 ounces of gold, you're in like the top 1% of, you know, the world population that owns gold. You know, that's 20 ounces. I mean, you got to think, you know, most middle class people now, if you've just done like whatever type of investing, you know, you're sitting on hundreds of thousands, maybe even close to $1 million worth of investments, and maybe another, you know, $1 million in real estate. You know, what is the price of 20 ounces? Really, you know, 50 grand US, maybe about 85 Canadian or something like that. I mean, that's not, or 50,000 Canadian. Um, yeah, like I just don't think that that you know, that's like, oh my god, that's a crazy amount of money. You know, it's a decent amount, but I look at that as like, you know, most the average car on the road is like probably 30 grand nowadays. Of course, that's Canadian dollars. But anyways, you know, how many $50,000 cars do you see? Like these SUVs, you know. Anyways, I could go on forever about this stuff. I won't, but I think you guys get my point. You know, having a little bit of insurance, financial insurance, that is, real wealth preservation and protection, goes a long way in these uncertain times. Um, you know, the world geopolitically is changing. We have rising powers and receding powers, and you know, the whole board's being shaken up, and new alliances, new blocks, power blocks are forming. You know, on top of all of the craziness that's already happened. You know, with the financial, I think it's all linked. It's all interrelated, and it's all it's a sign of the times. You know, we're not going to go back to the way it was 20 years ago. We're going to have something different. And it might be this multipolar world where, you know, we get this huge inflation shock, prices stay high permanently, and it's kind of like a new world. Currencies devalued, who knows? But that's the thing. When you own gold and silver, physical gold and silver, you're kind of prepared for any eventuality. When you don't carry any debt on your home or on credit cards or on line of credits and loans and car loans and student loans, you know, you're kind of prepared for any eventuality. And that is the peace of mind that comes with, you know, being debt free and having some physical wealth, gold, silver, real estate. Anyways, that's my video for today. Please like the video, subscribe to my channel, check out my website, My Road to Wealth and Freedom. Have a good weekend.